Happy Friday, traders. This is favour, market analyst for City Index. So the same theme continues with stocks, bonds, and the dollar all falling across the board because of ongoing trade concerns. At the time of recording, though, the major indices are testing some support levels that we could see a potential bounce from. So starting off with the S&P 500, we can see that it has bounced sharply off this long-term bullish trend line. And on Wednesday, we saw a big rally, didn't we? Before that rally faded somewhat yesterday, and today we are testing the highs from earlier in the week where the market had found resistance. It's now testing it as potential support. So we could possibly see a bounce here, but for as long as these lower lows and lower highs remain in place, the path of least resistance remains to the downside. That being said, with Trump cancelling or delaying those tariffs, there is a possibility we could see risk appetite improve a little bit, as we did see in midweek. But it's all about follow-through, which hasn't come to fruition yet. Let's see if that changes as we head deeper into the US session. Like the S&P 500, the DAX index found strong support from its long-term bullish trend line that has been in place since October of 2022. It was back all the way here. So the sell-off caused the market to drop sharply into that support area. And from here, it bounced back, rising back above the 200-day moving average and some key resistance levels. But let's see if the buyers will now step in to defend broken short-term resistance levels. In terms of resistance levels to watch, well, this gray area is key. Here, the index had found resistance in the past and support. So it's testing this area now from above. And let's see if we will go back above the zone on a daily closing basis. If we do, then that would be a positive development heading into the week ahead. Looking at the dollar, well, it has fallen quite sharply, hasn't it? Following the path that I had drawn on this chart previously, expecting a big breakdown, which has now happened. So let me just clear this chart a little bit and identify a few key levels to watch. Well, the main area was liquidity resting below the prior lows, and we've taken out both of those levels. So it's all about where the market will now close. The low of today comes in at 99.01, call that 99, which is an interesting level. In terms of resistance levels to watch, well, this level right here, September 2024 low at 115 is the first key area of resistance. Above that, we have this low here from the previous day at 170. And then beyond that, we have this low right here at 101.26. So that's the key levels of resistance to watch in the short-term outlook. But drawing a few other lines on this chart, the shaded region is very important insofar as the longer-term outlook is concerned for the dollar. For as long as it remains below this area, the short-term path of least resistance will remain to the downside. So it will need to clear this area of resistance now to turn the technical bias back to being bullish. For that to happen, we'll need the trade uncertainty to ease even further, with trade negotiations between China and the US potentially starting. That could be the trigger. But let's see if that happens in the near future. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.